Good day, everyone. Well, we are in what we call a Riptide Environment. We've been in this for a few weeks now as the markets came in heavily in December, then bounced, then anemically hit new highs, and now we're rolling over for the second time since that prior peak in late December. It's a very choppy environment. We have a number of factors that are at tug of war with each other between quantitative easing. You've got the ECB saying they're going to step up their QE program once again. Bank of Japan has been aggressively pursuing their QE programs. Central banks around the world act in unison, and the expectation is the Fed is going to also come in with some form of, if not a QE4, then some sort of derivative on, like an Operation Twist, something along those lines. So that is pushing the markets higher, but on the other hand, we've got the issues of the global slowdown, China slowdown, falling commodity prices, plummeting oil. It's upsetting to some of these countries economically, what's going on with these prices, and that's causing a downward pressure on the market. So, I would imagine this tug of war is going to continue here, and maybe the market puts in a bigger, more definitive major topping process, and these topping processes can take a number of months. But in the meantime, we're being anticipatory in terms of how the market plays out. The leading stocks shed a bit of light on what's going on internally with the markets, and so the market direction model has made some pretty good calls, even in this environment. These kinds of choppy types of patterns that play out, they don't remain this way. These are temporary periods, and then hopefully we're going to get into a trend one way or another, whether it's up or down, because that, of course, is where the bulk of the profits will be made in terms of the market timing, but also in terms of stocks. And that said, though, this has been, and the last couple of years have been a market where when you are playing the stocks on the long or short side, you got to be quick to take your profits. And right now, there's no sign that that kind of strategy is going to be any less effective. I think that is going to continue to be the strategy for this year until we get some sort of definitive sign otherwise. So you got to be nimble in this environment, and that is. Protect your profits, but of course keep your stops tight so you're not giving back your profits. Bill?
Yeah, I think the market sucks, basically, and my guess is we're going to break to lower lows eventually. This choppy pattern to me strikes me as sort of a rolling top. I thought the MDM did a great job going to a sell signal on Tuesday right here. When the market was up a couple hundred points, and I think we hit a high of up 287 on the Dow that day, and then we reversed on heavier volume. And you're starting to see this pattern. After the reaction low here that led to a rally to just marginal new highs, and then we roll over again. And then you can't quite get back up there. And then on this day when we had the big rally, that's because the European central bank said that they're going to be expanding their own QE program. But the bottom line is the European central bank can't do all that much, and they're somewhat hampered by the fact that they don't have uniform agreement among all the members. You've got the Greeks down there who like to drink, eat, and spend money, and then you have the Germans up north who are the austerity specialists, goose-stepping their way to fiscal austerity, and so there's no coherence. You have the Swiss yesterday depegging their Swiss franc to the euro, which they're basically just tired of watching their. I'm sorry, FXE is the symbol for the euro. I mean, they're just tired of watching their Swiss franc drop, and in the process they're losing buying power. So what happens is they get back a bunch of buying power yesterday when their own currency rallies. I don't know how much, 20-30%. What was the rally in the Swiss franc yesterday, Dr. K?
I think it was like 14% against the dollar, something like that.
Yeah, so the Swiss now have much more buying power. But if you've got any euros left over from any prior vacations in Europe, you might want to spend them now. So, Dr. K, you're holding British sterling, right?
Well, I'm holding we try not to hold cash these days, but yeah, dollars and sterling.
Okay, let's take a look at the Swiss franc. Somebody's texting us or instant messaging us the symbol. Yeah, look at that move. That's a pretty nice move there, FXF. And so you've got that going on, and I think that triggered some adjustments yesterday as people had to react to that, because I guess the Swiss stock market went down 10%, and there's some shuffling around. So you saw some more selling yesterday, and we've basically been down now. Even though these are color-coded blue these 2 days, it's only because you get opened up here and you close higher, even though you're still in the downtrend. You're down 6 days in a row, and you're testing the lows of both December, I think that's the 16th, and January 6th. And not really able to make much progress, and it looks to me like you're probably going to break to new lows. And the thing that I also look at, and I'm actually really surprised that the people over at IBD haven't paid any attention to this, because this is something Bill O'Neill used to tell me to keep an eye on, which is the IBD Mutual Fund Index, which you see here, and you can see it's actually closed at a lower low yesterday, and it's really in a downtrend. So in terms of the best mutual funds out there, they're having a hard time making money, and their holdings overall are making lower lows in terms of their value based on this index, and that tells me that there's potential to come unhinged here as this starts to come lower. And this is a big contrarian, or actually a big divergence that is indicating we may be in for some more trouble on the downside. And I think, yeah, you're in position to try and rally. But if you look around, leading stocks are just getting pummeled left and right. And I think you watch the stock. Let me go to a daily chart here. Facebook coming apart. What else has been acting pretty well lately? Palo Alto Networks trying to hang in there. Sputtering around its 20-day. It's one of the better ones. Taser's another one I've been keeping an eye on because it's acting. Oops. Throw that up there. Whoop. What's going on here? I got a sticky keyboard. There we go. I'm going to have to oil it or something. But it's trying to hang on to its 20-day moving average. But these other ones like these cybersecurity stocks, they get some play when there's some news about someone hacking into the Defense Department's Twitter page. Why the Defense Department has a Twitter or Facebook page, I don't know, but I think that's pretty stupid. And now you see these names underneath the 65-day exponential, and I'm just going to increase the, so you can tell the difference between the 50-day and the 65-day exponential. The 65-day will be the thinner one and the blue thicker one. So I know someone was complaining or asking us, not really complaining, but asking us to make it a little clearer. And so there you go. There's the 50-day. Here's the 65-day. I don't have any problem seeing the colors myself, but I understand some people do have a little difficulty seeing that sort of thing. Some people even colorblind. So anyways, somebody says I have no charts. AGQ. Someone's asking about, well, this is the silver ETFs. Both silver and gold are turning, and why? Because the confidence in the euro is declining. The Swiss are considered the most conservative in the European Union, and they're blowing off the euro now, and they're going to peg their currency to nothing, so which I think makes sense. If they have sound money policies and the rest of the EU members do not, I don't see why they should allow themselves to be dragged down, and I think they made the right decision with respect to that decoupling or depegging. But you're seeing these metals move higher. I still own substantial holdings in physical gold that I bought at 2000. Excuse me one second. I don't know why people call me during trading hours. Actually, that was my accountant. It's probably reminding me to send my taxes in, which I already did. But they're just turning. It's hard to figure out if there's some sort of a big low here because you're still got all this overhead. I don't know, but I think I just have a long-term position in the metals. From around the 280, 300 level back in 2000, I've just been holding on to that as a hedge, primarily against the continued printing of fiat money, and that's basically what it is. I'm not sure if you can play gold because I think it's highly news-oriented, But I do think that, as Dr. K was saying earlier, you're probably going to see the Fed come in with something. I think they're going to come in with Operation Twist and Shout, where they do something and then all the talking heads get up there and start babbling about how much money they're going to print. But stop and think about one very simple thing. And, you know, I always like to say in the stock market, common sense, the application of simple common sense will take you a long way. But just consider that the U.S. economy is just doing so well that the Fed has to keep interest rates at zero, and now they have to start talking about the potential for more QE. So, you know, that's how healthy the patient is. Don't pull that IV out just yet. That's how healthy the patient is. Anyways, here's Dr. K. Here's a quick question for you about the MDM. You ready?
Yeah.
Okay, Dr. K, my version of your MDM is up about 35 to 40% since the end of QE. That's pretty good. In October, best run since I started with MDM in April 2012. Did you buy a new crystal ball, or are the markets more coherent? I actually bought, Dr. K, a new crystal ball for Christmas, so that may be what's helping.
Yeah, it's called the placebo effect.
Yeah, that's it. I don't know. I think it's like you see what the market's doing, you make some adjustments, you know, and to some extent you hope they work, and so far I think they've worked, you know, and I think that's great. I'm very happy to see that, Dr. K. I just want you to know.
Yeah, and this also, of course, is connected with, in tandem with the now defunct UVXY model, but as I've said, that is transformed into the XIV model, which is continues to show good promise. So, like I said before, once I see enough positive results using that new model based on volatility, then I will go ahead and release it publicly on the website. But I really want to see a few more months under its belt. But things are looking very good.
Let's see. So, all this brings up where does the rubber meet the road here, and what is there in terms of setups? My primary tact over the last 6 days has just been to be short up my eyeballs, up to my eyeballs on an intraday basis, and there's been a lot of nice moves to the downside in stocks. You can see Tesla just blowing apart after coming through here on the gap down here when Elon Musk conducted a press conference, and he was asked if he could give some insight into the last quarter's sales, I guess, which are going to be part of the earnings announcement in February. And while last year Elon had no problem sending someone out to the Detroit Auto Show to babble about how great their sales were, he deferred and answered that he couldn't make any statements about sales because earnings are coming up. Trend is he only wants to talk about them when they're good, I think, and I think things are slowing up for him. You've seen in China, the Chinese aren't so hot about Teslas, and I think they're coming out with an electric car there that competes with Tesla. You got everybody coming out with competing vehicles. General Motors coming out with a 200-mile range EV. They say priced at $30,000. I think that's where people will go. But when you go to the pump these days, it's like $237 for premium out here in Southern California, which is where we have the highest gas prices in the nation, and that's cheap. And I don't see what the impetus is for buying a Prius, which in my view is probably the ugliest piece of garbage I've ever seen in terms of a car. Whereas the Teslas are a little more attractive, but I still think a Maserati looks a lot better than any of them. And I saw some other sports car yesterday driving down the street that was this sort of what do they call that when it's sort of metallic but it's flat, it's changing colors? What do they call that, Dr. K?
Iridescent?
Yeah, iridescent. Thank you. Somebody says I need a BMW i8. I agree, I do. And my daughter thinks I do too because she's about to start driving and she wants my 535i. But my wife wants to buy her a tank. So if anybody out there may be selling a used tank, let me know. Might make a decent bid on that. I'm not sure where I'm going to park it though. Somebody says, when will QE cease to be effective? I think it'll cease to be effective when the moon is in the 7th house and Jupiter aligns with Mars and not a moment sooner. So I think you can already see, go back to this day when the Europeans announced their new QE program or expanded QE program. The market started up and the smart money said, here, take my stocks. And they sold to all the ducks. When the ducks are quacking, you feed the ducks, and that's what they did. And it may be that the same thing happens with the Fed. If the Fed comes out with another QE program, and it could cause a collapse in the dollar, and maybe the action in precious metals is presaging that, and it doesn't work. But we already know QE doesn't work. Okay, the real reality is, number one, if you calculate inflation, as the government did before 1990, we would have 5% on inflation. 5% inflation. If you calculate it based on how the government calculated inflation before 1980, we would have 9% inflation. So there is inflation in the system regardless of what the Fed tells you. And also if you look at U12 unemployment numbers, you still have about 23% unemployment if you count in all of the discouraged workers that the government has no longer counted. And all of the jobs numbers they're all phony. They're all based on making seasonal adjustments and sometimes what strike me as very arbitrary adjustments, and it's just not real data. And I think you get the sense out there, you know, if you look at teenagers in a burgeoning economy, teenagers are working a lot, and you see the unemployment rates for all teenagers pretty high between the ages of 16 and 19. And then of course you take minority teenagers like blacks, and you're over 30%. So to me, that's not the sign of a healthy economy. When businesses are doing well, they're interested in doing things like hiring younger people, and they can invest in that sort of thing. And there's just more going on, and it's not happening. So I don't buy into the idea that the U.S. economy is all that strong. Do you, Dr. K?
Not at all. I think when you look under the hood, there's a lot of issues going on. I mean, you know, everything from the doctored unemployment numbers to, you know, the lack of inflation, which is of course distorted as well because they keep taking components out of the CPI that are inflationary. I mean, it's a rigged game, and of course the Fed wants to paint the picture as rosy as possible to the American masses to fool them into thinking things are better than they really are. And of course that's going on in the UK, it's going on in Europe, but nevertheless there is, you know, Europe has been in 2 recessions since 2009, and it's on the verge of a 3rd one. China's slowed down in its manufacturing growth. You know, all these countries are generally connected, and so enough of these are slowing down that you know, we have a global recession upon us. And but of course, government and Fed statistics lie and distort, so it leads the masses into thinking things are better than they really are.
Yeah, and getting back to where I was before I went spinning off on my tangent on the economy and QE and whatnot. Tesla now in a short little bear flag. I think it's headed lower. Remember, my thinking on this is that, looking at a weekly chart, that you're at least headed for this low, and that may occur on a big gap down. But my view is Tesla's headed back, maybe headed all the way back to where it started. You know, think some of these stocks like First Solar in 2008 when it topped. How low did it go? And I still think they're probably all shorts, all these solars. Great article on the cover of IBD. Well, I think their market calls and their system is mostly useless. I still like some of the articles, and I definitely like the editorial page and Michael Ramirez, who I think is one of the most brilliant editorial cartoonists out there right now. But you can see First Solar is in a bear flag, and it looks like it's ready to break out. Solar City is another one of my favorite shorts, and it's forming this, if you look at it, you're in this big head and shoulders, but now you're sort of in the secondary head and shoulders here with a couple of 1, 2, I guess 3 right shoulder, but this thing looks like it's ready to break down, and my guess is it's going back below 20 eventually, and I sure as hell wouldn't be looking to buy this thing cheap. Sunpower is another one, probably one of the better names, and it's in a similar situation. Since it failed on this late stage failed breakout here, notice how it breaks down, goes through the 50-day, bounces off the 40-week actually, and on the weekly chart, and then rallies just above the 10-week, and then we roll over. That's a pretty typical pattern. And so when you see these late-stage failed bases, usually the first breakdown will go through the 50-day and find some support somewhere, either off the 200-day, 40-week, or it'll undercut a prior low in the base. In this case, it just found support at the 40-week. It'll bounce up and then go just past the 50-day, and I think we can look at it here on a daily chart. But you see, once it starts to break down below the 20-day, and maybe you break here and you get this little rally, it starts to become shortable. I actually tried to short this, but I couldn't borrow any of it. Someday I may try doing options on the short side, but for now I'm doing just fine hitting stocks as they lie. We did talk about ARM Holdings. I think this stock is setting up to go lower. If you look at this pattern, it's a real long, complex, head and shoulders complex, where you now have, here's your head and shoulders formation, and you're getting a couple, 1, 2, 3 right shoulders. But you might also notice, if you look, here's another head and shoulders right here, where you have the left shoulder, and then a big volume break to new lows defines the right side of this shoulder, head rather, which is also another right shoulder of this one. Okay, so the whole concept is fractal. And now you've rallied back above. You notice the last week up, you stalled out here, volume was light. Yes, I know that occurs in December, but you just take it at face value, because usually the low volume holiday period is used to jack stocks that institutions really want to distribute here. But now you're hanging along the 40-week line, along the 200-day line, and I think it breaks down. But there's I mean, you could throw darts here. Yesterday you could have thrown darts, and pretty much anything was going to break $2-3. Some of my other favorite ones, and I've talked about these in the chat room, Trip right at the 50-day. I've been short this one, but it's undercut this low. Probably going to bounce, and on that basis, I think Expedia is another one. If you look at this pattern, sort of a V-shaped cup with handle, tries to break out, it fails. Goes through the 50-day, rallies up to the 50-day, it's shortable here, and now it's coming down. I'm actually still short this one, or I've been working it here on this rally, but it's not clear I'm going to make any real progress, but I'm not really worried about it. I made a ton of money in the last few days, and I'm not really playing all that heavy and keeping most of my powder dry as I wait and see how this rally plays out. And like Dr. K says, it's a riptide market, so you got to be ready for anything as it comes up. Another one that's worked very well for me is this CENX, and you guys know I've talked about this as a late stage. Here's a big run, late stage cup with handle formation, reverses here. Reminds me a little bit of Sunpower in 2008. And then you break down, and you get down in here, you rally back up close into the 50, but actually you get into resistance at the 20-day. That's where I started shorting it. I figured it's headed for the 200-day, and I've been campaigning it on all the rallies. And I'm out of it now, but the other day you got a nice break to the 200-day, and that's it for now. I'd be looking for a rally, maybe to short, but this is probably heading a lot lower. And they are an aluminum producer, and a lot of their products are used in the oil industry. So let's see. Are there any questions that where I can slap somebody around here? Let's see. Let's. Well, here's AMBA. Well, you know, AMBA, you had to be quick on the draw. If you saw this gap and you bought it, guess what? You get a beautiful 4-day run that's about 20%, 15-20%. I bought that. I sold it, and I sold into this move here, and here it comes. It's trying to hold the 20-day, but it's not clear to me. This thing's had a long run, and I wouldn't consider them necessarily a dominant force, a juggernaut in the chip space, making chips, system-on-a-chip products for the video industry. There's some things about them that I find attractive, and then some I don't, and it's always very competitive, and people coming in with newer technology. I know Apple's talking about, I guess there was some noise about them filing for a patent for a camera, a wearable camera. Let's see, Celgene, someone's asking about Celgene hanging in there. Yeah, it is, but for all you know, it's the next one to break. It's had a long run. You're seeing some of the others. Gilead broke down at the 50-day here on this rally. That was a good short spot. You know, the rally up here into the 20-day, maybe that's a short spot right here. You've got Biogen, which is also, even though, you know, whenever it's up, IBD will talk about strength in the biotechs like Biogen, but there's really no strength here. It's just volatile, and it's back and forth. And it seems like you short it at the top of the range, and you cover or buy it at the bottom of the range, and you get away with that as a nice day trading or short-term swing trading sort of approach, rather than buying this thinking that you are going to see some sort of, see, I want to do something here. That's better. That you're going to get some sort of a nice, you know, breakout move. But I think what you're looking at here is a stock that's had a long run, and now you're getting into this sort of slop and chop phase, and I wouldn't be surprised if you eventually see this fail, perhaps after earnings. But the biotech sector has been the subject of a lot of speculation, and I have a good story to tell, because I know we had a broker on here who's trying to pitch us on Zyop the other day. And this stock trades around $5 here, and it trades about 1 million shares a day at this point in time. a friend of mine, a very close friend of mine actually, who is one of the biggest brokers at UBS, he saw this, I guess, sitting along the 10-day, and he bought 400,000 shares on this day for his clients. So when you ask who's buying this, well, brokers are buying it, and brokers fall all over themselves because they get all excited about penny stocks, and they can get their clients who are generally greedy enough and dumb enough to buy something like this to buy it. But this worked, and he calls me up or texts me on this day when it gaps up, and he says, I bought this thing, I bought 400,000 shares of this thing down here because it was drying up along the 10-day, and it looked good, and brokers got to do business, so they're good at telling stories. And then when you see one of these penny stocks start to move that trades low volume, it's usually all the brokers falling all over themselves to buy it, and the clients will love to come after it. I remember when I was a broker way back when. You go at a client with a $5-6 thing, oh, they'd be all over it, and they feel manly if they can buy a lot of shares. So who's buying a stock that trades 1 million shares a day, and they're buying enough volume or enough shares to be 40% of the average daily volume? Well, a friend of mine who's a broker. Then there's news that I guess Exxon, Intrexon, XON as I call it, Exxon, and this company are, I don't know, getting some agreement or royalty agreement or something with some University of Texas or something like that. So that jacked the stocks up, and you see this huge move, and it comes right back down. So you can see this is really just spec garbage. And you can get nice moves in these things when everybody's falling all over themselves to buy it. And you see it all over the place in the biotech. You've seen Bluebird. Same thing here. This may be a little more substantial, though, on this Bible gap up, and it's run up. But I just think it's funny that brokers are the ones running this thing up. And so he sold it in here, and you saw 21 million shares trade here. I think the smart money is saying, here, suckers, there's some news here. You're dumb enough to buy it. I'll give it to you. And yes, there will be some institutional buying in these sorts of names, because a biotech fund that specializes in biotech primarily, and it's got nothing but biotech names, it operates more or less like a venture capital fund would, and I have a lot of friends who are venture capitalists, and what they do is they may have 50 or 100 situations in a fund. So they set up a venture capital fund, and they'll put in 50 to 100 companies that they've taken stakes in, and they only expect maybe 5% at best of those to hit. But when they do, they're big, and the biotechs are very much like that, because you'll get these random gap ups where they're up sharply on some sort of news about their drug. But the bottom line, this is another one, another biotech losing money that's getting this sort of a speculative interest, and you drive a nice move in it. But for my money, you trade 1 million shares at $5, I got to buy almost 1 million shares just to have a good position, and I'm not into it. But if you buy something like you get lucky like that and you get a big move, sell it. Let's see.
Well, that's the other thing is these kinds of patterns are very, very few and far between, and sometimes the worst thing that can happen is someone actually did buy this, say, and then they're making this money, very quick money on it, and then they psychologically become conditioned to looking for this kind of pattern. Right. Unfortunately, this kind of setup that occurs for every Ziap out there that actually does this, there's probably 30 or 40 that don't, and so it ends up becoming kind of a waste of time, and also in the end result, you probably end up losing money rather than making, because okay, you made quick money on this one here, but you can get cut up nickeled and dimed on all the ones that don't work. And worse, if your trading is not absolutely disciplined, some of these cheap ones will go lower a lot faster, and your 5% loss could turn easily into 20% loss.
Right. I mean, they're penny stocks. The bottom line is they're low quality. If they're selling for $5, they're junk, and they can have these sort of spec moves, but it's mostly brokers getting on the phone and pitching their clients, which is what brokers do. Remember, brokers are so good at the market that they're still brokers, okay? With apologies to all of those of you out there who are brokers, but I'm sure you're some of the few who do the business right, and you're not just out to take your clients, sucker your clients into BS so you can rack up some commissions. But it's dangerous, and if you get away with this, when the ducks are quacking, sell to the ducks, feed the ducks. Somebody's asking, this is probably a good question that shows how a little bit of knowledge can be a dangerous thing. Somebody's asking, is this shaping up as a pod? I would say it's more like a second stage base. If you want to call this your first stage flag, 2, 3. I mean, you could say this is just a base failure, a double bottom base failure. You can see how volatile this is, and now it's failed through there. So, whether it's a pod or a failed double bottom base, I don't really care. I don't try to slap a label on it, but when it broke down here and failed on the breakout here, and then went through the 20-day here, bounced off the 50-day, probably was shortable here, not here. But don't get hung up on this idea that you can label something a pod, and therefore that means that you can just start shorting something willy-nilly because you can put a stamp on it, POD in big capital letters like I like to do sometimes when I annotate charts. But at that point, something has to break down for it to really be a punch bowl of death. And it's just a matter of saying, what kind of a pattern is it? Pods, we talk about pods. Here's one I'll give you. I think it's this one, yeah. We talk about pods as being failure prone simply because you have a very sharp break followed by a sharp rally. In this case, you might see something like this. It's a slow rally, and it takes some time to consolidate on the way, so it's working out weak hands and bringing in stronger hands on the way up. You would rather see something go straight down, straight up in about the same duration, so tending to be symmetrical. They don't always have to be, but that sort of thing is less sustainable because the rapid run-up doesn't give the stock time to work out weak hands on the way up, and so all it does is come back to the highs and then it fails. So somebody asking me once about ISIS. I don't like this stock. It's another one of these speculative biotechs. It's had a nice move, but look at this break from 65 to 55. Then you go to new highs to 67, and then you break back down to a low of 55. So this thing has 20% swings over the course of 2 or 3 days. If you're going to day trade, I think that's great, but I don't really see how one's able to stay in this thing unless you're going to sit there, unless you're a broker who pitches your clients on crap and then you just sit there, and I guess you get lucky on this. But this thing, is it a pod? It will be a pod if and when it starts to show signs of breaking down. And by that time, it may be something else. It may be a late-stage failed base up here. It could be form a head and shoulders and roll over. I mean, you've seen that with Tesla. If we look at Tesla, Tesla started out as if you look at this, you had a big move here. I want to make this look a little deeper. There we go. You had a big move up here. You base, you break out, you come back into the top of the base, you break out again, and now you fail here. So you go through the 50-day down to the 10-week, 50-day, whatever, and you go down to the 40-week. You rally back just above the 10-week line, and then you roll over. But now you could consider this a late-stage failed base, and I don't know if it's really a pod. It's not deep enough, but call it a late-stage failed base. But also notice now that when it became, as it developed as a late-stage failed base, once it broke down here, that became the right side of a head in what is now a head and shoulders. And you saw here's the neckline right along here, and it rallied up into the neckline, maybe just a little passive, but right into the 40-week line. So here's a case where if you're watching this on the weekly, you would see the move right into the 40-week line, but it doesn't get so far up there on the daily. It's a little short, but you need to be watching both charts when this happens, okay? And when it gets up there, you can see you got a low volume rally in here into the 40-week. And yes, I know it's during Christmas vacation or whatever, the week before Christmas. But again, institutions will use low volume holiday periods to jack stocks they're trying to get rid of so that they can mark them up and then unload them to you, the hapless investor who's dumb enough to try and buy them off the lows. The interesting thing I think about Tesla is that it's basically a textbook situation in terms of the chatter about it. I mean, if we go back to the beginning of the run, which is back in May of 2013, Dr. K? Yeah. This is where we got on board the stock. And at that time, Dr. K and I wrote an article about Tesla potentially being like GM in many ways. Not that necessarily that's another GM, but it's like there's a thematic similarity to GM back in the, I guess, 1915, 1916. And we get a lot of vehement, I'm going to use all the V words, vehement, vitriolic, and almost vengeful sort of comments from people who are shorting the stock and taking it personally, which is really bizarre when you think about it. But a lot of people do that. They're dumb enough to take stuff like that personally, but that's their own psychological weakness, and they're not able to look at a simple price volume chart and figure out what the trend is. Instead, they're going to make fundamental arguments for shorting the stock here And also, there's also this element of hate, which hate is an emotion, has no place in investing. And then up here now that we've finally topped, okay, and we've been coming down, and this is the biggest breakdown in the stock off a peak since it started its big run. You're seeing articles, and I think this is probably one of the few things Seeking Alpha is good for, is you're seeing all these articles on Seeking Alpha of people trying to make fundamental arguments for why Tesla's a long-term hold now. And that is so classic, because you'll see this in leader after leader that has a big run and then tops. When they first start, like even Apple in 2004, when it started its run, one of the biggest arguments I would get, and even from institutional clients, because back then I was still running the institutional advisory group at O'Neill, they would be saying, well, Apple just has an MP3 player. Anybody can make an MP3 player. And they miss the point. And the stock has a big run, And finally, when Apple topped in 2012, and that was, albeit a temporary top, it was still a top, and it was a shortable top, and it was very profitable if we go back to 2012. Here we go. On this fractal head and shoulders, it later became part of a, if you look at this, you notice this is a fractal head and shoulders, and it's just part of this big head on the weekly chart. But it came down as a great short. But as we wrote an article in here and talking about why Apple was probably headed lower, and that it's probably done for now unless they can somehow reinvent themselves. And of course, we get a lot of nasty responses to the article, calling us incompetent, and how can you say a stock selling at 13 times earnings is expensive and going to go lower? But that sort of argument speaks to a certain ignorance about the fact that P/E ratios really just reflect investors' demand for the future earnings stream, not the present or past earnings stream, but the future earnings stream. So when you see a hot stock, a great company like Apple selling at 13 times earnings when the current earnings are 20% or more, it's telling you that the market does not value that earnings stream as highly as it did in the past, primarily because it sees that earnings stream starting to diminish. So PEs are a measure of demand for an earnings stream, forward earnings stream, and not so much a measure of absolute current value. So that's a concept we talk about a lot, but it does hold true, and in this case it did for Apple. But of course, Apple's come back, and it's once again a sure thing. But you're starting to see this sort of rolling top in here, and you're breaking down. I think if you break through this space, you're going to head through the 200-day, which is interestingly catching up to the stock, and it's pretty high up in the pattern. But you can see that once it violated the 50-day here, you get one rally into the 50-day that you could have shorted into, and it's come lower. And now we're testing the lows of early January, I think January 6th. So you can see this as it plays out here. It doesn't look very good. Let's get some more questions. 620 has helped when trading UVXY, XIB. Any more ideas on day trading these? Well, if 620 has helped, why do you need any more ideas? I always think it's interesting that if you show something to somebody, they want more. It's not good enough. I get an email from a guy, and he's reading about short selling in our books. And then he wants to ask me, is there a pattern, an IPO pattern that is shortable? It's like, okay, why do you need to start overthinking this? If you've learned something that's effective, to me the 620 chart is just a tool. There's no magic to it. There's no major improvements. I know Dr. K uses one that he's made some slight adjustments that he sees as some, slight improvements. But for my purposes, it works great as it is. And I know you've been using it to trade UVXY, right, Dr. K?
Well, yeah, VXX, XIV.
Yeah.
So, yeah, it works fairly efficiently for that.
Yeah, and then the second part of that answer, from my perspective, is I work my butt off in the markets, and I love it. So to me, it's just a big treasure hunt. I just get off on it so much. It's like a drug to me. And but I work hard, and I do my own research. And when I feel it's appropriate, I might show you guys something. But my latest stuff, for $50-$60 a month, why should I be giving away the farm? And I'm not going to be. So what I decide to write about in the books, what we decide to write about on the websites, is actually some of our more recent stuff. But if you're talking about the current cutting-edge stuff that I'm working on and testing out and maybe even implementing successfully, maybe sometimes not successfully, That's my own stuff, and I'm not here to just start revealing each and everything. So I'm also the objective also that I have these days is just trying to teach investors how to handle the market with respect to their own psychology, with respect to implementing very basic methods that we show, because they are very effective. Pocket pivots are very effective. I don't care what some people might want to think, but it is a fact that they're effective and they're a great tool. But we're always working to push the envelope, because I think you have to continuously adapt and evolve with the markets. I don't want to end up like Jesse Livermore shooting myself in a hotel bathroom. You think he could have at least picked a better place to shoot himself, like maybe on his yacht or something, somewhere a little less bathroom-like, where people defecate and urinate. In any case, he was also manic depressive, so there's that aspect. But I think you have to adapt or die. So somebody says here, Gil, are you making much use of HDSI's new delayed data? I would think it would not add much to your style of trading. Well, I would say you probably think too much. I actually like it quite a bit. I don't need something up to the minute. Here's what's going on right now. I'm looking at all securities right now, and I'm looking at what's moving on volume. We can quickly update this if we go intraday, update intraday now, and so it's doing that. Give it a second or two here. It's pretty quick, and it's about 15, 20 minutes delayed. I think they'll get it closer to they'll shorten that time frame, but the bottom line is you don't really need to know everything at the exact moment of impact. Just get me into the right area. Show me the right stocks. Show me what's looking good, and I quickly can scan down this. If I want to sort it by ERG rating, so I'm getting the best names up at the top, I can do this. But also, some are down, so what I'll do is I'll use this filter, price up with ERG 180 or better. So here we go. So some of the better ones, let's just look at these. Oh no, it's a white screen of death. Oh, here we go. And give it a little time to come up. Ron Brown, who is one of the HDSI, he tells me to get an SSD drive. Dr. K, you use these SSD drives now, don't you?
Yeah, they're the fastest things out there.
Yeah, so I need to get something with an SSD drive because he says this all comes up really fast if you have that, and so I'm always wanting to be faster, right? You can see this thing's moving up a little bit. And then what you can do is, if you want to look at real time, if you have eSignal or any other, you can even go to stockcharts.com because I think their charts are updated in real time. They use BATS exchange data. But then you can go, look, what's the symbol diax, and you can type that in here, and you get an up-to-date view of what the thing's doing. So for my purposes, this works fine. And, remember, when you assume you're making an ass out of you, well, mostly you, not me, but and the other thing is you think you know my trading style. I always get a kick out of that one. If people actually think they know what I'm doing, they're wondering what I'm doing, they try and tell me what I'm doing. But guess what? The bottom line is you have no freaking clue what I'm doing. In any case. Let's see. Let's look at some other ones. So, here's another hotshot biotech. Let's go down. Oh, Horizon Pharma. That one looks kind of interesting. Like I see, I'm trying to pocket pivot off roughly from a point around the 10-day line. But again, it's another biotech. And I got to tell you, it's a little disturbing to see this because you've seen these biotech spec type moves before, right, Dr. K? And they don't always end so well, do they?
And they usually don't.
No. Here's another one. Oh, here you guys go. RadNet. I'm sure you'll like this one. Let's see. Come on. It's what happened there? Here it is. And there you go. It's an $8 stock, everybody. You could buy 10,000 shares. It only costs you. How much will it cost you? 80 grand? Yeah. Maybe your account's not that big, but that's pretty tiny. Skyworks has been a good leader lately, and I recognize a lot of these names, but Skyworks Solutions, I'm not sure. That's probably a bug they need to work out here. It's trying to hold the 20 days, so it's actually trading pretty decent volume today. I think for $599 a month, or I'm sorry, a year, and you're looking for something that's going to lead you to the right names, this is great. And then you can monitor things using your real-time quote system, which eSignal works as a real-time quote-unquote charting system because the charts, that are moving along on eSignal are real time. So, let's look at Skyworks. Yeah, so you can see what's happening there, and not really much difference between the chart here and the chart here. When you think about it. So it looks fine. It works fine for me. And I think for $5.99 versus Wanda, which costs $25,000 a year, I'm getting to the point now where I'm probably just going to cancel my Wanda. I think you should cancel yours too, Dr. K. I think it's a ripoff. I don't find it's not that useful to me, and I think what they charge is ridiculous. As an economist, how do you interpret missed earning of BAC and Citigroup? Well, the only problem with that question is I'm not an economist. Are you, Dr. K?
No, I don't think any of us should be.
Yeah, and why do I need to interpret the missed earnings? The market's doing the interpretation for you. Duh. Okay. Anyways. Trip. Did I talk about this one? Yeah. Well, it's undercut this low, so maybe it's going to have a little reaction rally back up to 70. I would like to see that. I would short it probably. Kihu 360 QIHU. Whoops. You know what we can do is we could actually, well, I won't do it right now. But I think everybody who doesn't have a lot of money to afford more expensive systems should at least give this a try. There is a learning curve, but I think once you get the hang of it, it's pretty intuitive. Kihu is big head and shoulders, broke down through the neckline here, and then rallied. If you put the neckline, say, right there, where I have my cursor and the little red line is running across, you get a rally roughly up to the neckline where you want to draw it. Within a couple of percent or so, and now it's breaking down, but it's down there and it's hovering around these lows, so who knows if it bounces up. I think your best bet if you're looking to short it is look for a rally to short into. Let's see. What else? Twitter. Yeah, Twitter got smacked around yesterday, didn't it? There's a lot of talk right now, a lot of chatter. I'm staying away from this one, and I have been for pretty much the whole month because it's been rallying. But you could have hit it up here, and you get a nice break. And now it tried to open up this morning. It hit the 20-day moving average. You can see that, and it's looking like it wants to reverse. There was talk of Carl. What's his name again, Dr. K? Icahn? Is that it? Yeah. Yeah. And talk of him taking a position in the company, and that. And then there's also the usual BS that someone's going to buy them. I don't see why someone would buy them. I do think that. Longer term, there's going to be more of a washout in the social networking space, and I'm not sure if these guys have it together. The pattern certainly tells me that it's pretty weak. I mean, and this is a pretty classic pod. This is a pod. You see this rapid breakdown followed by a rapid move to the upside, and it's pretty symmetrical. You see that? And then as you break through the 50-day moving average, you bounce off the 40-week, and you rally just above the 10-week / 50-day, and then you blow apart. Does that look familiar? That's a very common theme in how these things break down. And then as a stock is breaking down from the initial pod formation, now it's evolving into a left shoulder, a big head, a right shoulder, another right shoulder. I think the stock's headed back to 30 or lower. Eventually, and it may not happen until after earnings, but in the meantime, I think it's a piece of garbage, and I'm not really interested in buying it. It may be tricky or problematic trying to short it going into earnings at the end of the month, but if you're a very quick trader and you're doing 1, 2, 3 day swing trades or even intraday, you caught this move yesterday. I mean that's a nice move to hit. If you take a 50% position, the thing breaks down 10%. You're going to catch 5% in your portfolio, and all you need is a couple of those to get off to a good start for the year, and so that works pretty well. How about this one for getting slapped around? Short Tesla here and use 195.75 as a stop. Well, Gar, you're not really that far off track here because what you have is a gap down, okay? And you might even consider this a shortable gap down using the highs of yesterday, maybe another 1 or 2 or 3% on the upside as your guide for a quick stop. The alternative is using the top of the gap here, just under 200, as your stop. Now, I see what you're doing because you're looking at this as a bear flag, and you're using the high of this day, which would be yesterday at 197.74. Is that right? 195.74 as your stop, and that's a very practical way to approach the trade. So you have warmed my cockles by showing me that you're actually learning something from all this that I try to teach you guys. So yeah, I think that's a practical way to work it. No guarantee it's gonna work, but I do think one way or another this thing is going to just blow apart. And I'm waiting for earnings to come up and praying. And I know praying isn't really a great investment strategy, but I'm praying for some sort of a jack, maybe to the 20-day, the 10-day, or something going into earnings. And I may be bold enough, depending on how much cushion I build up between now and then in my account. And I'm off to a pretty decent start this year, much better than I was last year at this time. And I still was able to do better than triple digits, despite getting off to a pretty pathetic start, actually, in January of last year. I may try and put some out, not a lot, maybe a 10% position into earnings, because I think something's going to go really wrong for these guys, or it's already starting to. M&ST, Monster. M&ST. You know, I've been looking at this. This pops up on some of my screen. Oh, it's trying to break out, but you know, this thing's had a big move. I don't know. Maybe someone's going to buy them out, but I'm not willing to buy anything right here. But it's showing. I think this is no. There's no pocket pivot. I don't know. This is a little V-shaped. You're running out of gas up here. I don't know. I'm not something I'm looking at. Somebody says, I understand this is not a market to be looking too hard for longs. Well, if you see something setting up and it's acting well while the market's getting its head handed to it, that's something you should take note of. Doesn't mean you have to buy it just yet. But you're asking, how do you use 620 buy signals with Voodoo Pullbacks at the 20-day EMA or 65-day EMA? I don't really use the Voodoo buy signals necessarily. I might, you know, if you look at something like, let's see, something I did recently. Okay, let's try VA here. So when you had this pullback to the 20-day, that was 7 days ago. Now let's see if we can pick up a. Okay, let's go VA. What day was this? That was January 8th. So we're going to go to January 8th. Go in the Wayback Machine here and back up. Here we go. You can see that early in the day the stock was going here, but it just trundles along the the 20 period for most of the day, and finally it gets a move up and off of that. So if you're watching this as a signal to come after the stock, maybe you use it, but generally if I see something pulling back on a Voodoo pullback into the 20-day and the volume's real light early in the day, I just buy some and see what happens. Grub was the same thing, I think, on that day. Let me see. On yeah, it was this day, same thing, and on that day, let's see if we can set this up right. This is a little clearer. Earlier in the day, it had I guess around 7:30 my time, so an hour into the trading day, you had a pocket pivot turn. That was a place you could have bought it. So you can put them together that way. I don't necessarily always do it, and it doesn't guarantee success either. So VIPs, I don't know. This thing looks like it's ready to blow apart. If you look at this, here's a little breakout attempt. It's sort of failed. So you go through the 50-day, off the the 10-week. Which corresponds to the 50-day on the daily chart, comes down to the 40-week, bounces a couple times, and then the second time back just above the 10-week, and now here we go. Probably going to be a short. I don't know when earnings come out, but this doesn't look so hot to me. Let's see. AKRX is a short. Acorn, don't really see it. It's trying to come out of here. Is this a biotech too, Dr. K? Is this a drug stock? Do you know?
I believe so.
Yeah. So. I wouldn't short it here. It almost looks like it wants to go higher, but there's no basis for shorting it other than if you think this is a left shoulder ahead and it's at another right shoulder and your resistance is here, you're better off shorting it up closer to 42 than shorting it, well, where are we at now? We're at 40, so that's 5% higher. I don't know. I don't know about this one. And the other thing, it's a biotech and it's got all this, potential for spec type crap going on in it. So Grub is the name. I think these guys are going to do well when they announce earnings. You notice when it's pulled back into the 10-day, here's light volume, and then it pulls back in the 20-day. It's sort of getting dragged down with the market. It's a little bit of a thinner stock, smaller stock, and so it gets pulled down with the market. But you did have some pocket pivots in here for several days along the 10-day, and it's pulling in. This one is on my buy watch list, but I'm not. It's not like I'm jumping in to buy it here. right now. I still think this market's got some problems. I mean, you're trying to come off these lows. You're holding these lows for now, which have been support 1, 2 times before. But the market's weak and the volume is picking up. You can see the pattern as we roll over here at the beginning of January, end of December, and even going into the New Year's holiday, volume is picking up on the sell side, and it just continued to pick up as we rolled over. Then you get the jack for 2 days, and rolling over and volume's picking up. So in my book, the market's in a very tenuous position, and I'm not really willing to step out and start taking longs here. I'm more interested in testing the short side on bounces here, but it's not clear to me whether we're going to 1-day rally, 2-day rally, or whatever. SERB, what's this? Service Master. Well, it's just kind of a... These guys came public again? So what they do? Go private and came public? I mean, it's an IPO, one base, 2 bases, 3 bases. I don't know. I'm not going to buy that. Looks okay. Somebody says, so does recent action speculative garbage biotechs tell you that market closer to significant correction? I don't really know, and I'm not going to say, oh, well, there's speculative action in biotech, so I'm going to go short the market, or it's all coming down. It is something that I think is a warning sign, and you have to put it together with a lot of information. And you don't just take that single thing and come to some conclusion about the market. I already talked about...
Better, or if you're going to look for divergences, it's better to look at divergences between the major indices like the Russell 2000 versus the S&P and the NASDAQ. Because there have been some turning points, like in late 2007, where the Russell was lagging the major indices, which kept hitting new highs, and the Russell didn't. And that was a subtle clue.
Yeah. Somebody says, if you dump Wanda, where will you get the fundamental data? I don't know. Why do I need fundamental data? I remember when I was first buying or looking at buying Tesla and Solar City, they never had any earnings. I just was going on a thematic basis. And the other thing I think is that what happens in the markets these days is that if a company has 5 quarters of strong earnings, everybody sees it. So it's it's not a secret. And my general thinking is that HSI will probably improve the fundamental data. That's the next step, I think. And I think overall, what these guys understand is that they can improve their product, and they can also offer it at a much better price. So that this is really the new America mentality of the new company, or company offering innovative products and adding value to the customer's process at a better price. That's what the entrepreneurial thing is all about. And I just think the prices that O'Neill charges are basically gouging people. So, but if you track the newspaper ads, you're going to notice that there are very few real ads, and the preponderance of internal ads in the newspaper on a day-to-day basis is a sign that they're not really getting any ad revenue. And so the question becomes whether O'Neill's going to continue throwing money at the paper. I mean, he's got a lot on the side, I know, probably, I hope so, for making money in the market. I don't know how much they've been able to make lately because it's tough. But that question comes in my mind. And the biggest thing for me is I've used these tools for a long time, but my concern is that you're going to see the company disappear, or they're going to sell the products to somebody else or something, and that's going to mess everything up. So, to me, it's a matter of making sure I have what I need if something goes awry over at O'Neill. And Bill's like, what, I don't know, he's going to be 83 or 84 this year. So, I'm just hedging myself. And the guys at HGS Investor Software are very open to working with me and trying to put things on that I want. And I know some of you have asked me to tell them to make a Mac version, but the developmental cost of making a Mac version versus the potential for revenues, I think, doesn't really add up. But you'd have to ask them. I don't know. And the other thing I want to point out about HGS Investor Software is if you do get the product, contact them regarding how to use it and various other customer service issues. I am not their customer service department. And if you email me asking me about how to use HGS, I'm just going to ignore your email. So I already have a policy of ignoring stupid questions. Anyways, on a chart like ANIP, does not have to be ANIP. It's gone from 6 to 61 after a run up from 28 November, blah, 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 blah. At this stage, just be calm and see which way it breaks. Okay, I see what you're talking about. Had a huge run, ran up. Well, I mean, it depends on what you want to do. If you want to take your profit, go ahead, but there's no technical basis for doing so. So, don't ask me what you should do. You figure it out. I mean, if you're using the 50-day as your guide for a stop or a selling guide, then that's what you're doing. If you're using the 10-day for a guide or some sort of a break, maybe even you could use a 65-day or whatever you decide as a stop, but don't ask me to tell you what to do with the stock right now. That's the sort of question that irks me because it tells me that you're too dumb to make your own decisions. And if you are, then you shouldn't be investing, plain and simple. Or if you have this urge to have to ask somebody what you should do when the pattern is very clear in terms of it's forming a base, it's so far holding the 50-day. So you better decide, what you're using as your selling guide. And don't rely on other people to tell you what to do when there's no technical evidence for really anything other than the fact that it's consolidating. So, in other words, learn to read a price volume chart. If you want to ask me about certain techniques, fine, but when it's so obvious on the chart and you ask me what you should do with the stock, I just think that's really lame. Okay, so sorry to have to slap you around on that, but hopefully I get my point across. Somebody says Coca-Cola owns 16% of Monster. Yeah, maybe they're going to buy them. Would you say Selging is setting up, or is it more prudent to wait for a pullback to the 20-day? Is it setting up? Well, you have a breakout here. You're probably better off buying it here on a pocket pivot. But again, you can see the technical buy point, okay? And you're asking me what you should do here. How do I know? If you think it's within range of this pocket pivot, you want to buy it, then buy it. And then it's a matter of where do you set your stop. If it pulls back into the 10-day, that would be my preference, but it doesn't mean it has to do it. So, someone asked me, how do you handle a trailing stop? Placing it, volatility can stop you. What? How do you handle a trailing stop? Placing it, volatility can stop you out if it isn't wide enough stop. Any advice? Yeah, my advice is get this idea out of your head that there are magic stops that are going to keep you from getting shaken out of stocks, okay? You have to have the flexibility. If you get shaken out of something, it hits your stop, turns around, and goes back up, you have to have the flexibility to be able to come back and buy the stock. But I repeat, there are no magic stops that guarantee you will never be shaken out. So get that one out of your head, first of all, and that'll solve half your problem. And the other half of the problem is decide where you're going to put your stop. And, the basic idea behind any stop, and this is always what's in my mind first and foremost, is number one, when I take the position, how much am I willing to lose? In other words, how much damage to my portfolio am I willing to take before I'm going to unload that position? And then once that stock starts moving up higher, then I have to answer the second question, which is how much am I willing to give back if this stock starts to pull in? But the bottom line here is if you do want to take profits, as I've done for the last couple of years on sharp upside moves, then you can take your profits and then come back, look to re-enter on a pocket pivot or some kind of voodoo pullback. I'll give you an example. Stock, that I handled. Here's a pocket pivot. Once it had this pocket pivot down, I'm campaigning this thing and running it all the way in here, and I sold just above 115 in here. It wasn't perfect, but at that point, what do you got? You go to 90 to 115, you got a 25-30% profit, and that's it for me pretty much. And then what happens is I'll look at a pullback here to the 20. Oh, I can buy that. It runs up, and then it runs out of gas. Sell it. It breaks down, and now it's sort of in no man's land. Here you get a nice bounce off the 50-day, which would have been buyable. So I'll come back in like that. If it starts to wobble or fail, I think I even tried to buy this little pullback in here, and once it started to fail, I'm just gone. But that's how I'll handle them, okay? So I'm actively taking profits with the idea of trying to come back on either a pocket pivot or a voodoo pullback. Voodoo stands for volume dry up, extreme volume dry up. I'm just trying to be like Ian over at HCS, who likes to make up a lot of colorful names for his indicators. Anyways, that's the way you handle it, okay? There isn't some magic stuff, right, Doctor? You want to expound on stops at all, or did I pretty much cover it there?
Well, yeah, I mean, I think we've talked about it quite at length.
Yeah.
You gotta know your trading personality, and you gotta put your stops in context with the chart.
Yeah.
In other words, if it's very volatile, then you got to take that into account. Otherwise, you'll get stopped out prematurely. So your stops are an art and a science. Art in the sense that you have to know your trading personality. So what works for one person is not going to work for another in terms of stop placement.
Right. Someone's asking short CRE here with a stop. Wait, as a short? Why are you asking me if you should short a stock here? You tell me. Okay, the stock. This is what the stock looks like on the weekly. It was a short here. It was a short here. Might even been a short here when it broke out to the downside through this little cup sort of bear flag. And now you're way down here, and you're asking me if you should short it. You know, if you want to short it, go ahead if you think it's heading lower, but figure out where your stop is. You see some things I notice here. You can see it on the weekly. A little bit of a little head and shoulders here. You got and it shows up as a fractal head and shoulders on the daily here. So maybe it's going lower. Don't they announce earnings soon? If they do, then you got to take that into account. But please don't ask me, should I short this here? Should I buy this here? You know, to me that just indicates that you're really not paying attention, and you're getting yourself, more importantly, you know, when I slap you around for this, because I want you to get away from this idea of dependency on what others think. And I want you to learn to think for yourself. And what we try to do is teach you tools and methods that help you think for yourself. And it ticks me off sometimes, and I know I'm probably a little too sensitive to it, but it ticks me off when people want to take a tool and then they want to make it some sort of certain thing and ask me what I think they should do. It's like if you learn how to use a tool, you should be able to figure it out yourself. That's what I'm teaching you. And this idea of dependency on others, what others think, and asking what you should do, it's like you're not maturing as a trader. You're what's the opposite of maturing, Dr. K?
Evolving.
Evolving. Yeah. So come on. Anyways, I'm sorry. You guys are gonna have to deal with this stuff.
Three days report after the January 20th close.
Yeah. Rewalk. I don't know. There's neither here nor there. I don't know what's going on. I'm not buying it. I'm not shorting it. Google has a short on a rally back to the res zone. Well, again, you're asking me what you should do. I think it's breaking down. You've undercut this low though, and earnings come out pretty soon, I think. So I'd prefer to find some hairy rally up to the 50-day that I could short myself. And I've actually this is on my short sale watch list, so you're halfway there, but you're like 3 weeks late. You should have been on it here, okay? But yeah, go out and look at the resistance. You got the right idea. That's right. And that's more of the kind of question I like to get, you know. Here's the setup. Where are the resistance zones? How might you handle this on a rally? And that makes sense. Not, should I short Google here? Let's see. You can get fundamental data. Yeah, you can get fundamental data from HGSI. They use Reuters data. And O'Neill, you probably have more insight on this, Dr. K. O'Neill's internal research firm, which is a room full of low-paid people who enter in data from 10Ks and 10Qs and whatnot all day long, they actually adjust earnings, and they have their own way of calculating earnings. So whether it's more or less effective, I don't know. But you know, if you see a company showing good numbers as Reuters calculates them or as O'Neill calculates them, then it's probably fine. And mostly I look at a thematic basis, not necessarily what the earnings are now. And then I try to look at estimates, and you can subscribe to some, you know, Zacks or First Call if you want that sort of stuff. Market Smith, $9.99 per year, not worth it, somebody says. Yeah, I got to wrap up here because we're about an hour and 10 minutes into this. I'm just going to fly through these. YY on a short YY on a move back to downtrend line. Well, that would be where you'd want to short it. If you hit it here, you're doing okay, but that is where you'd want to try and hit it. You know, if it's here and it's going lower, maybe the high of today is your resistance. So there's different ways to like test this out and try and work it. So, Gil, generally when you use a daily moving average as a stop, do you use it as an intraday stop or an end of the day stop? I use it as a midnight stop in the middle of the night. I don't know. If the stock looked like it's going to push through my stop and keep going, I'm gone. I'd say, I don't sit around. Well, do I wait till the end of the day? Do I wait till I've had breakfast or lunch? You know, do I wait till I've gone to the bathroom? It's like if it's going through my stop, and you know, generally I don't like to see things go more than 2 or 3% past the moving average because I'll just cover them and wait to see what happens from there, and I may end up coming back short on the stock a little bit lower. Okay, so. But this idea of do you wait till the end of the day? Do you wait till intraday? You know, do you wait till the moon enters the 7th house? Those are dumb questions. Okay, let's see. Someone says, I'm sorry about BAC. Don't be sorry, Alfred. You're just asking dumb questions, which is what all newbies do. So, you know, everybody asks dumb questions to start out. But it's my job to slap you around so you understand that. Anyways, just want to agree with you that despite low interest rates, banks did poorly. I think banks are in trouble. A lot of these lenders, if you've seen what happened to the housing group the other day, I think the housing area is slowing down rapidly, and of course that's the mortgage area for these guys. And yeah, but the stock was already telling you there was a problem before the earnings came out. So you know, this will tell you the story first, okay? You don't have to get into some big intellectual big think. You know, you just go let the stock tell you what you're doing. Do you place mental or hard stops? I place sexual stops. How's that? I feel stop. You know, I like I said again. I kind of decide how much maximum I'm willing to lose on a position when I take the position. When I get to that point, guess what? It's gone. If I can get a feel for the stock intraday and see that maybe we're in a phony rally, I might give it some more time. But all of that depends on a lot of other factors, namely how much cushion, am I up for the year. If I'm up 80% for the year, guess what? I got a lot of cushion to mess around with. If I'm starting out this year, say up 10, 15%, I have some cushion, but I'm not in the mood to get too aggressive just yet. Talk to me in June, and we'll see where I'm at and how aggressive I want to be. But there's so many other factors that have to be considered, because the primary issue with every single stop, and I want you to cement this into your head, is how much are you willing to lose when you take the initial position, and number two, once that stock starts going up and moving higher, how much are you willing to give back on a pullback? It's that simple. You know, all this business about, you know, do you set hard stops, soft stops, gooey, squishy stops, do you cover if it hits your stop intraday or end of day, or you know, after you go to the bathroom or after you have you're on another planet for me. Somebody says you have the patience of a saint. The tolerance for stupid questions is mind-boggling. Well, I try to stay focused on the fact that I'm trying to teach people here. But guess what? I'm going to slap you around if I think your question is dumb, just to make my point. Perhaps someone is experiencing a rectal cranial inversion. So, Gil, do you ever use a 620 on other time intervals, 15 minute, 60 minute? No, not really. I find it just works for my purposes, and it's a good tool. It's a good practical tool, but it is not a system. It is not a trading system for me. It's just a guide to keep me out of trouble. So, anyways, you guys, I hope you've gotten something out of today's webinar. We've covered a lot of stuff. We've gone almost an hour and 15 minutes, and that's pretty much all I have. Dr. K, you have anything to add?
I think we're good here.
All right, you guys, good luck. It looks like the market once head lower, but again, you're in a position to bounce, so it's just a matter of watching how the bounce occurs, keeping an eye on short sale target stocks as they rally into areas of potential resistance, and then being willing to take your shots when things are set up. On the other hand, keep an eye on the stocks that are acting the best, you know, the grubs, the tasers, even Palo Alto Networks looks okay. We've looked at several of these. And if the market is able to muster up some kind of a significant rally, then be ready to move on the long side with some of the things that have acted better. Preferably at that time they're pulling back into, say, 50-day or 20-day moving average on light volume. So those are things you want to keep an eye out for. Anyways, thanks for showing up.
Witching today, so volumes will be exaggerated.
Yeah,
so,
yeah, that's right.
Don't
Good
think
point.
The massive bounce that we're seeing right now on huge volume, because the volumes are distorted.
Yeah, good point, Dr. K. All right, you guys, thanks for showing up.
Keep that in mind as well.
Right. Thanks for showing up. We'll catch you guys next week. Take care.
So long.